What is good, guys? It's Rey-Jay back with another video, and in this one, I want to break down what's going on with the overall market, what you should be watching for moving forward. I'm also going to talk about some very important data coming out for next week that could cause a massive short squeeze on Tuesday for the entire stock market. I'm going to break down why this is actually very realistic, why this is very possible in my opinion, and what the data that we're seeing is suggesting about the markets. But before I begin to demo what this data is, how this data could affect the markets, why it's very possible for the market to see a massive short squeeze on Tuesday, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit any amount of money into the account, you are guaranteed up to 6 free stocks. If you deposit $500 into the account, you're guaranteed 20 free stocks plus 6 months of level 2 data. If you deposit $25,000 or more, you're guaranteed 70 free stocks plus 12 months of level 2 data. This offer ends in 10 days, so check it out before they run out. Now let's break down what's happening with the market and these different levels. So looking at SPY, we were basically range bound for the last couple of weeks. Every time SPY would hit like 458 to 460, we saw this thing get rejections. And every time we hit 453 to 455, we tend to see this thing bounce. We're going back and forth for almost 2 weeks, or a little bit more than 2 weeks technically, since this time zone right here. Uh, but what happened today was SPY continued to break out. We saw a short squeeze, and then this thing managed to close above 460, which is a very significant close. Now, why is this so significant? Why did this even happen? Because we saw this thing push up the way it did, but because we saw SPY close the way it did, this is a very, very good sign for next week that the bulls are in control and they're getting ready for another launch to the upside. We also finally broke this 460 resistance, and SPY is continuing to maintain this bullish looking structure. So still pushing up very, very nicely. The daily time frame is still holding up, and on the 4-hour time frame, it is still looking very, very bullish. There's no sign of it breaking down yet. I also want to add that on the weekly, since we ended up hitting the high right at the end of the week, technically, okay, the weekly does not show any signs of rejection or anything like that. But I want to break down some other catalyst, okay, that could add to the fire, a catalyst that could help this thing go even higher, the thing that could help this thing push up even more, in my honest opinion. And that's going to be CPI. So, why is CPI so important? As you know, it's going to dictate the Fed's policies. We're expecting CPI to be 3.1% for the consensus and the forecast, with core being 4%. But one thing that you will notice looking at the data historically is that CPI has been on a big downtrend for the past year. It's been just dropping and dropping and dropping for almost every single report, with the exception being, I would say from July through August, we saw it actually increase just a little bit. But since then, it's just continuing to fall. Core CPI has been on a downtrend. It's a little bit more sticky, but this is actually still looking pretty good for the Fed because the Fed has said they want to see inflation reach 2%. They're maintaining their target, and we're getting closer to the target, at least for CPI. And we're still kind of far from it for like core CPI, but we're still getting closer by the days. So at core CPI still at like 4%. We're a little bit further away for that one, but for CPI in itself, we're getting closer to the 2% mark. Now, one thing that's worth noting is how could CPI affect us? Well, when the market looks at CPI, it's going to look at this as something that's going to dictate the Fed's policies, and it's going to, excuse me, it's going to be pricing and a lot of other things thanks to that. So if you look at the historical data, you could see when you look at the CPI and you look at just like the crude oil price, so this is like the price of it, there tends to be a correlation between them. And then if you look recently, you will see that the data has come out, even though we don't have this for CPI, we do have this for crude, and this is actually the crude oil futures. Notice how they tend to have a very strong correlation. So look at this since 2000. They came up together, they came down together, they came up, down, up, down, up. The list goes on, down, up, down, up, down, and up. And now they're coming down together. I can't really zoom into this. Let me see if I can zoom in. It doesn't really matter, right? But when you zoom in, if you just look carefully, you'll notice something very interesting. For, let me see, the crude futures was at 89 back in September. Then we hit 85 in October. Then we reached 77, I believe, for November. And then for December, we hit 72. Whereas CPI, we kind of like stopped out at October. We don't have the November number yet, but we know that crude dropped quite a bit, for the month. So because crude was dropping, that's a good signal that inflation is once again continuing to cool off. We've also seen the dollar at a very interesting place. I also want to add that when you look at US all grades and all formulations of retail gasoline prices, uh, the average retail gas price, okay, it was $3.96 back in September. All right. For October, it was $3.74. And for November, there was a big drop, an even bigger drop relative to the previous months by about 30 cents. So we saw gas prices drop almost 10% on average, according to the data, which is once again good to cause CPI to drop. So there's a extremely high probability we're gonna get a Fed pause once again next week. The Fed is not going to raise rates again for this year, for the rest of this year. And the market is just excited. It's continuing to push. We're not at extremes just yet. We're still seeing the excitement just loom. So, with that being said, okay, CPI, in my opinion, there's a good chance we're going to get around 3%. If we get below 3%, that's going to be even more bullish, but around 3% is what I'm expecting. I think core is going to be below expectations, very close, if not below 4%. Looking at the crude oil data, looking at the retail gas prices, looking at historical trends, and looking at this major trend throughout the data for the last couple of months. We also have more historical and like more specific details I can get into, but maybe for like another video. So with all of this being said, okay, what does all of this data mean? This means that I think there's a good chance that whether the market starts pushing as soon as Monday, if not by Tuesday, when CPI comes out Tuesday morning before market open, the market's going to lose it, and we might just see this thing continue to squeeze and start pushing up to these crazy levels. Now, on Tuesday, how high could we go? That I can't really predict. I wouldn't be surprised if SPY just gets up to like 465, if not even like 467. It depends on how low CPI is, whether it's like 3.1% or if it's 2.9%, that's going to be even more bullish. If it's 2.9%, we could just go straight up to 467 in one day. We could see a crazy squeeze in one day. But if it's like at 3%, 465 is a realistic target. So it is possible we see this thing gap up and just run again. And I think a lot of money could be made in the process. Do I think that both sides are possible? Yeah, it's possible that come Tuesday, let's just say we hold up like this on Monday. Tuesday comes for CPI and we just continue to sink because of a bad CPI data. Hey, it's possible, but I am not leaning in that direction after everything I just showed you. It looks more likely that this green trend line, this green little arrow I have right here, is going to play out, and we're going to see a monstrous pump for Tuesday. I think Tuesday specifically could be a monstrous day. The technicals look bullish. The candlesticks look bullish. We're likely going to see another push going into Tuesday, a squeeze. What about for Tesla? Well, it's very simple. Tesla's getting tighter and tighter and tighter off this wedge. We're also forming a flag. Now, we had this head and shoulders like structure, but I think that this is just a trap. I don't think it's going to play out. And I think that Tesla's more likely just going to start uptrending. Now, we want to see Tesla get above this blue trend line right here. We want to see Tesla break above that. So if we end up kind of like touching this again, which I'm not actually doubting we're going to see much of a move like that, but like for Monday, we could just make a move like this. And once CPI comes out, Tesla's going to follow the trend. All right. Tesla is going to most likely do this. If it's a hot CPI, we're going to see Tesla sink and lose our trend line of support and turn more bearish. If it's a cool CPI, it's a nice CPI. Hey, 250 plus is coming quite easily. And we can see Tesla just break out like this. What do I think is more likely? You guys know my point of view. I think we're going to see Tesla break 250 soon. A big push, even above 250. I think the market's going to get excited. What about Nvda? What about Nvda? It's going to depend on the data, of course. One could interpret this as a double bottom like formation. We're starting to uptrend right over here. And I know the volume is dropping. I don't really have the volume on my chart. The reason I know someone called this out, I don't have volume because I'm trying to make the chart simple. I do look at volume and other things on a daily basis. The volume has been declining just a bit. I think we saw a little bit more volume just as of recent. Let me just double check that on Nvda. So the volume, it still is declining. It's not really that strong volume, but we don't need insanely high volume to push higher because the volume could just develop intraday, right? So is it possible Nvidia kind of like does this, back test this support right over here where this imbalance was, and then it just launches back up to 480 like this. It's a possibility. Maybe it launches even harder thanks to CPI. Maybe it doesn't even drop that much. It just makes a move like this. But ultimately, I believe Nvidia is going to hit 480 plus. I think there's upside coming. It's going to start pushing even higher. For the QQQ, I'm seeing something very similar. We have a nice accumulation structure. This looks like an inverse head and shoulders, if anything. So I wouldn't be surprised if we get very close to 394, kind of reject off of it, then try pushing. And if we break that, I mean, the sky is the limit. I think we could get very close to 400 as well. I need to like chart this a little bit more. So I'm going to go back to like, I'm going to use the weekly for this just to show you. I had this level marked. I think the line got deleted. I'm going to double check it. So the weekly, I'm not going to use the weekly actually. Let me switch over to the daily. I think the daily is a little better. But anyways, on the QQQ, the chart still looks bullish to me. I had this level marked. I think they got deleted for some reason. But we have these high targets up here. You can see we have a lot of resistance up around the 400s. We have this unfilled gap. I'm going to call this level out. This unfilled gap at 396.5. Above that, we have this resistance right here, very close to 400 coming next. Above 400, there's 402 and then there's 404. I see 404 as like another resistance worth noting. Those are your levels so far in a nutshell, basically on the QQQ. The chart looks bullish though. That's one thing I'll say. We got a nice breakout. We'll be watching to see if it continues. I would say that I'm going to be watching to see if we get a decent CPI. I mean, if we get it, this thing could get very close to 400. It could actually pump even more. I think it's just getting started, and we could see tech just continue to hold it up. Nvidia and Tesla could help it, but the only thing that's a little concerning is Aapl, because even though Aapl is pushing, it's actually approaching some tight resistance. We're going to be watching how 197 reacts. I'm going to hide my levels just temporarily and switch over to the weekly just to show you. Now, the weekly structure, the weekly looks bullish on Aapl. Really, really bullish, right? We have a nice cup and handle like formation, but we have this high over here. We have this high all the way back towards this 197 area. So that's going to be our next target on Aapl. It's forming a nice cup and handle in the weekly. I think that what Apple's going to do is this. If I were to give you guys my 2 cents, since we called out 197, I think that Apple might basically push up. It's going to push up more towards 197, and we'll have to see if it could break that or not. It could do something like where it kind of like shuffles up here just a little bit, makes an attempt to go a little higher. I don't know if we're going to get to 197 on Monday or Tuesday. Might come down, get an initial rejection, and just try to kind of like shop up here, maybe consolidate a bit. And then come Tuesday, a good CPI. If Apple already got to 197, could just gap up and try to get closer to 200 and then reject just a little bit and then start pushing up. Or could come down, back down like this. I wouldn't be surprised if we hit like 197, reject a little bit since we have historical resistance there, and then we just try pushing up and we end up breaking out the next day after CPI comes out. So CPI is going to cause the market to gap up or gap down. Wouldn't be surprised if we see Apple gap up and just start pushing. But this is just a hypothetical example, guys. I hope this video was helpful. Please have a great day. Remain calm, cool, and collected. I'll see you guys in the next one. Thank you and peace out.